What is up, guys? Today it is around 3 p.m. Just got done with a trading day. Got my fifth payout of 2026. But to get to things, in this video right here, we are going to learn exactly what trends are, why they exist, and how to identify them on any time frame, what they are, and just going over trends. So, most beginners see price moving up or down and call it a trend. But by the end of this video, you will know the difference between the noise and what you think is a trend and a real market trend. So you are going to be able to make smarter market decisions. So, what is a trend? A trend is a consistent directional movement. You are going to have two main trends. You're going to have a bullish trend, which, if you remember what I said bullish is market going up, and you're going to have a bearish trend, which is going to be market coming down. A uptrend is going to have higher highs and higher lows, versus a bearish trend is going to have lower highs and lower lows. So, an super easy way to think about trends is basically think about a trend like a river. Price doesn't just flow randomly, it flows in a path created by institutional activity, pretty much. So, why exactly do trends form? So, price trends form due imbalances in buying and selling pressure. And expansion is when this creates a bullish or a bearish trend. So, going back into higher highs and higher lows for bullish trends. So, as you remember, bullish means we are going up, and trends consist of multiple candles in a row. So, right now, we are going to be specifically going over bullish trends. So, going over a bullish trend, time frame doesn't matter right now, is going over what trends are and how to identify them. But trends are more powerful in a higher time frame environment. As we can see here, we create a higher, we have this original high and this original low. The way that you know it is a high or low consists of three candles. That is all you need to make a high or a low. You're going to have one high here, which is going to be candle number one. Candle number two is going to make the high or the low. And then candle number three is going to confirm that higher low. As you can see in this high, this candle's wick is higher than the number one candle's. Here, we'll go right here. One, two, and three. Okay. So candle two's wick is higher than candle one's wick. Candle number three's wick is lower than candle number two's wick. And you can see it kind of creates like the triangle point between these three candles. This is how you identify a high. Now, oppositely, this is going to be the same exact way that you're going to identify a low. For a low, candle two's bottom wick is going to be lower than candle one's wick. And then candle three's wick is going to be higher than candle two's wick. So as you can see, we have this high and this low, which is going to be the initial start of a trend. This isn't a trend yet because you need to have three congruent kind of higher high, higher lows to make a trend. Realistically, just one in a row like this. In this bullish trend, as you can see, we wait until the next high and low form. As we can see, going to give you a second if you can see what I'm about to say. But right here, this is going to be 1, 2, and 3. Candle 2's high is higher than number 1 and higher than number 3. And this makes another high. We know this is a higher high because it is above the original high. Now, for the lower low, we are going to use the same exact idea as this low. So, number 2's low is lower than candle 1's and lower than candle 3's. So this means it is a higher low because it is higher than this low. The way that you can confirm a trend is if you keep on making higher highs and higher lows. So if this trend were to continue, up here there would be another higher high with another higher low. Now, if we do this transversely for bearish trends, it's pretty much the same concept, except you are going to be creating lower lows and lower highs. So, to make it not as confusing for you, we'll bring this there, make it red. So, for bullish, equal higher high and higher low. But for bearish, which we're about to go over, change the color. Equal lower low and lower high. So what this means on a bearish trend, you know it's bearish because it's going to the right and down. I just kind of used a trend line to show this out, but it's going to be the same concept as these candlesticks over here. You are going to have candle 1. So candle 2's low is going to be lower than candle 1 and candle 3. And then same thing for identifying a high. Candle 2 has to be higher than 1 and 3. So you're going to have your original low, then high. And then the way that you confirm that this is a bearish trend, you are going to look for a lower low and a lower high. Meaning, you wait for price to come out, right? Price goes on, creates another low, which is lower than the original low, and a secondary high, which is lower than the original high. So that is exactly how you identify trends. In its basic terms, we'll go over actual charts and we'll see if you guys are going to be able to actually understand this. But trends are confirmed in sequences, not single candles. If you have one massive candle to the upside, which is a massive bullish candle, that is not a bullish trend. You can be in a bearish trend with a massive bullish candle, but you still need to wait for a secondary higher high and higher low to make it a bullish trend. So that's basically how you identify trends. And we'll go straight into the live charts. But before we go into that, we have one more thing that I want to go into. So trends are confirmed by candle closes, not wicks. Wicks show rejection, closes show control. So if you remember back about what we were talking about wicks and bodies on candles, what this means we want to see the bodies close above the highs to create the higher high. And as you can see right here, this is how we are going to use it. So we have our original high and our original low. What else can we see here? I'll give you a second. Yeah. So right here, we're going to have the secondary higher high because candle 2 is higher than 1 and 3. And then a secondary higher low because candle 2 is lower than candle 1 and 3. So now that we see the higher high and the higher low, boom, we know it's going to be a bullish trend, right? And now we want to see this trend continue. We need to see this trend continue with a higher high and a higher low. Now, what most beginners, and I don't want you to mistake this with anything else, trends need to close with the body above the high. So you can see this is the higher high, and you see how this body closes above this high. That's how you know it's a higher high. A failed higher high, as you can see here, is we make this high, but only the wick goes above this higher high, and the body closes lower. So here you might be thinking this is going to be a new higher high and you're waiting for a higher low. That's where you can easily be tricked. You need to wait for the bodies to close above the higher highs to make another higher high. As you can see here, we have a failed higher high because only the wick goes above. And then now it's no longer a bullish trend because we now close below the higher low. So now this is going to be the new low, and it's no longer a higher low. So if you would have mistaken this being a higher high, this wouldn't be a higher low because this low body closes below the higher low of the previous candle in the trend. And lastly, with trends, is going to be something called choppy price action. Choppy price action is when there are no clear higher highs and higher lows in basically consecutively. Choppy price action is going to be random highs and lows where the lower lows are taking out the lower lows and then the higher highs are taking out other higher highs. And it's just kind of back and forth price action that you can kind of all fit in one box. Like if I draw a box here, it all fits inside the box. So now going into live price action and looking at real trends. Right now, we will go onto a 1 hour chart to try and identify trends. And right in front of you, you can tell me what we just went over, what this trend is. So I said you can fit this in a box. This is choppy price action, or also known as consolidation. Let me put it here. So you can see it's consolidation because we are inside of this price range only. And if we're looking at the higher highs and higher lows, higher high, no higher low. Higher high, higher low, but then we come back down and take out the lows. That's consolidation. Now, if we go back and find a good example of a bullish trend right here. So, bullish trend, we have our original high and we have a low right here, right? Now, you wait for price to go on. And you're waiting for what next? Yep, you're right. You're waiting for a higher high. So, higher high. How do we know this is a higher high? Because this high is down here, and then the new high just created is up here. Candle 2's wick is above candle 1 and candle 3. Now, we want to see what low is created after the higher high. Now, we have the next low created, and it's going to be a lower low. confirming a bullish trend in market structure. And as you can see, this continues up, how we create another higher high right here, and then the next low is going to be right here. So that's a walkthrough of a bullish trend. As you can see, we have bearish trends here. And pretty much what I want you to do is go through back in your own charts on TradingView and go and spot and mark out different higher highs and higher lows and just and see if you can find different trends that you can make and see if it plays out. But in the next lesson, we'll combine what you learned with the candles and trends and understand actually how structure forms, and we'll go over liquidity.